Hey everybody, hey traders, happy Thursday. Welcome to the final hour, one day before non-farm payroll. Markets were pretty much not excited at all today until around, let's say, 2:25 to 2:30 p.m. Eastern time when the SPX dropped a quick, what is that, about 30 points, and then has since bounced back a little bit. So let me float this out. Let's see what I'm talking about. Still looking at this 6,100 level for tomorrow. Possibly the SPY. I did put on a butterfly spread to try to get to the SPY. We'll see what non-farm gives us. If it's 8:30 a.m. and it's a good jobs report, do we gap higher on positive news? If so, we're going to come back up to try to retest those highs. 610.78, I think, was the recent all-time high on the SPY. Let me go back to the 60-minute here. This was the poke above. Yep. So 610.78 was the high. So just like I said, we've got a 610 level that maybe gets tested. Or is it a possibility that this market is going to fail to poke that level, or we get rejected off that level? Right? It's close. Right now we're looking at some kind of indecision driving us a little bit lower. If I connect, low to low, we will see if we fail to take out these recent highs, if we have a rejection there. Or you can look at this from the flip side with futures. And let's go back to the 5-minute time frame here. I'll get to that in just a moment. Actually, let me just do a little housekeeping right here. I posted this on my Telegram channel just to make sure we're all very, very clear. If you are following me out there, youtube.com/Chris Pulver, youtube.com/Financial Wars. My final hour sessions, my live YouTube sessions, they are here. My Discord channel is Chris Pulver Trading. It is very easy to follow me on Discord. If you get into my community, I don't send friend requests. I don't initiate direct messages. Traders and followers can chat with me all the time in free group chat, in stock chat, options chat, futures chat. You can direct message me if you want to initiate it. I'm happy to reply, but I don't initiate, nor do I send friend requests. The reason I don't is because a lot of scammers do that crap. So I don't. On Twitter or X, my handle is Real Chris Pulver. I stream on this when I push my YouTube sessions. I'm typically also pushing on Twitter or X, as well as Facebook and I want to say, what else? LinkedIn. So anyway, these are my real accounts. That's it. That's plenty for me to be out there and have my social outlets. And so my point is, if you are getting what you think are messages from me in Telegram or Discord or whatever, it's not me. Okay. You know how to find me. If you are following me, this is where I'm at pretty much every day. I'm in my Discord every day. I'm in Telegram, my Telegram every day. I'm in my member only services every day. So anything outside of that, it's not me. Just to make sure that's very clear. Okay, I'm taking a look here. I've got a trade running towards the end of the day. I pulled this trade for about $15 credit. Right now it's showing about $10.90. So I've got a few $100 lined up right there. This top trade, it was upside down. I got in for about $15. Now it's showing $17.30. So this one's upside down a couple $100. Well, this one is up around $400. So net positive. But the nice thing is I'm going to see where these end up going for the close. So right here, you can see I have some potential risk on this trade, right on the verge of my risk coming in. If it pushes up a little bit higher, that's good. And on this trade, I'm right in the sweet spot towards this final hour for the last 54 minutes. So I will be watching to see if I can get this is looking for a cash settled gain. It may not be the full like $15 that I pulled in for credit, but if I could settle this thing for, $4 or $5, that's fine by me. This is looking like and this is what's crazy is like for the final 54 minutes, this trade right here, this purple line, if you can see it, I know it's a little faint, but this purple line will ultimately end up looking like my P&L. So this is just a risk graph on Thinkorswim. So I'm tracking this trade. I'm watching this trade. I think this is a really, interesting way to trade the final hour or the final couple of hours in the markets. Obviously, there's a lot of risk, but you have the potential for a good reward, and premiums are okay. So anyway, I'm going to keep an eye on those through today's final hour. I've got a hard stop around 3:55 today with a webinar coming up at the top of the hour. If you'd like to join me for that 4 o'clock webinar, all are welcome. This will probably pop up in my Telegram channel right here. Also, I wanted to share something else. I'll be running a new service next week in addition to the other ones that I run. Ted, I was wondering how you did this. Are you TJ in my Discord? You're taking a lot of trades, or you said I think I made 7 daily profit plays today. That's freaking awesome, especially if you killed all of them up until like 2:30 when the market got a little excited. But it kind of snapped back, and it's probably fine. But still, a little bit of threat depending on how tight those, how tight the spreads were. So, anywho, I will be watching. So I mentioned earlier, possibly the run up. Here is the chart I'm looking at for SPX. Right now, this market still to me is proven bullish until otherwise. So this level gap, bounce right off of it. I mean, I'd say above 60.50. Above 60.50, we're hanging in there with the bulls. To me, I'd be a little bit more bearish if we break below like 60.25 or we start to break below 6,000. So 60.20, I'll say 60.20 to 6,000. If we break below there, then I would say nice attempt by the bulls, but failed. We break this trend line, break the structure, watch the futures market as well, and then look to see where this takes us. So do we go down to fresh lows? Remember we had our deep seek level here. So deep seek surprise on that Friday to Sunday or Friday to Monday. And the market gapped down in a big way, spent the entire week fighting back. Then we have Trump tariffs hitting the headlines Friday afternoon, last Friday, and then a big gap down over the weekend with Canada, Mexico seeing, okay, 25% tariffs. What does that mean? Market didn't like it. But then the rest of the week was, we delayed tariffs until April 1st, and it may only be 10%, and it might not be, whatever. So the market started fighting back. Is it enough to take out the highs? Not yet. Is it enough to keep the bears, tamed for right now? Sure, looks like it. So unless we break this trend line, unless the futures market, which is coming back to test the trend line, which I thought was interesting today. We're still not at the weekly VWAP, not yet, but my S&P futures is right down to this trend line that I've been watching pretty much since I connected to 2 lows early in the week. This was Sunday night to Monday. There was our Friday to Sunday open, and then you have establishing lows on Sunday to Monday, Monday to Wednesday, and then Wednesday to Thursday. So if the futures market maintains sideways or up, we're still bullish until we're not. So these are some close levels to keep an eye on, right? Watch the futures market. This is the NASDAQ futures on the bottom, the S&P futures on the top. You can see the trend line that I'm watching right here. Are we going to break this tomorrow morning, 8:30 a.m.? Are we going to, have a surprise in one big kind of news candle because non-farm comes out with CAD news tomorrow morning at 8:30, and then next week we have more inflation data coming out of the U.S. as well. So we have non-farm expected to print 169, unemployment expected to stay the same as previous at 4.1, average earnings previous was 0.3, expected to be a 0.3 again. So is there a positive print? Is there a negative print? We'll find out. Labor market since basically last July has been seen as a lot steadier. That's what allowed the Fed to justify cutting rates the way that they did. 50 basis points, 25 and 25. So anyway, and then the Fed is looking to pause. I looked at this morning. Fed is likely going to pause through March, pause through May, unless the inflation data changes a lot. Now, I will say this. I'm going to go ahead and take a screenshot of this and make a reference. So we're taking a screenshot here on February 6th. We have inflation data next week. So let me make a note here. So this is February 6th at 3:11 p.m. Eastern Time. Okay, I want to timestamp that because if we come into the inflation readings next week, does any of this change? So I will save this and go Fed, watch, tool, pre-Feb inflation. There we go. Because right now, probability is pause through March, pause through May, rate cut coming in June. That lasts us through the end of the year, and then possibly one in December for that second cut. So this would be cut 1, this would be cut 2, June and December. That's all we have. Again, this is always subject to change. There's no certainties here. It's nothing but percentages and probabilities. But this tool leading up to the Fed is usually not wrong. We did have a close call in September of 2024. It was basically a 55% chance the Fed was going to cut 50 basis points and a 45% chance they cut 25 basis points. The tool was still correct. They did cut 50 basis points. It was not what the calendar showed, which was kind of interesting. The economic calendar showed a 25 basis points cut, and it was like, oh, the Fed surprises with 50. Well, the watch tool said 50 the whole time. Okay. All right. Let's see here. Daniel, what's happening, man? How was your day? Ted, you crushed it right before the drop. You quit. That's good. Yeah, anything after like, I mean, I'm not saying you can't trade to the close, but anything after 2 p.m. with those, those daily profit play strategies, that could be a little rough. Here I am sitting up. Okay, so now trade number 1 is coming back into break even, which is kind of nice. There we go. So I've got some profit potential here into my trap. And here is my second trade for another probably close to $4 right now. Not too bad. So I'm going to watch and see how these settle. This one should be settling maybe $100 to $200 profit if it stays where it is. I mean, if price goes higher, that's good. Price goes higher, it gets into my profit trap, that's perfect. This one just needs to not really budge too much. I don't want this one to go too much higher. So realistically, maybe another, I would say I'd be good at the 60-60 level or even up to 60-65 on the SPX for these trades to settle in and be a good end of day profit. Nice, Daniel crushing it, 22.49 profit. You the man. You the man. All right, let me check some earnings plays. Today we had earnings right here. So we had this morning, Eli Lilly, Roblox, ConocoPhillips, Peloton, Hershey. I checked all these. I had a couple of trades in. I'm still managing Qualcomm through next week. AMD, I have an expiration for tomorrow. Chipotle, I have an expiration for tomorrow. So CMG, unfortunately, sitting right in the middle. I'm going to look to see if price pushes lower. I need to get this thing down below around probably 52. I guess anywhere around like 55 is fine, or up into like the 60s. Now that might be a tall order to get up to $60, $61. Maybe it's better off if we have a sell-off tomorrow to get down to like 55 or 54 to cover my cost. AMD, we are trading at 109. I'm looking to see if we can push down into the 104 or lower area. So maybe that's a chart alarm set at 104. I'll keep an eye on that one for tomorrow. EA Sports was a nice winner this week. It's up to 130. My liquidity level that I called out was 130. We took a nice little trade, closed out for about 94% return. Happy with that. Actually, it was a 71% return, but we closed out for nearly full profit, which I was pretty happy with. Qualcomm, I'm still managing that one. Amazon has earnings after market today, trading at 237. Will Amazon deliver? Will they not? We'll find out. I put on some fresh trades today on Google. GOOGL, I averaged in at 191. 176 is a pending order, and 150 is a pending order. These are just dollar cost allocations, like $1,000, $1,000, $1,000. MSFT, Microsoft, same thing. I added a trade in at 416.69. I've got a lot of ratio spreads in this one. So February, March, and April, all for decent income. If this doesn't come lower than like 370 or 375, then what's the income situation here? That's 168 plus 120 plus 240 plus 229. I'll make $7.57 a contract without any type of ownership, which obviously I'll be happy with. Okay, that's good. Let's go back to this really quickly. I'm just going to spot check. Awesome sauce. This trade is doing a lot better now. Now we're getting some profit trap in this one with a $16, $17 initial capture. Now it's up around, let me see here. It's got a cash settle, but it could be trading somewhere between like $100 to $200. Right now, I think it's up about $2.70. The second trade is right here. Don't go too much higher now. Come on. I mean, if it does, it does. But I got into this one for about 15. Still some profit. I mean, probably the smart thing would do is to take the profit now on both. But I want to see how these kind of cash settle. So if it stays where it is, that could be a nice little double victory. for SPX end of day. So far, so good. All right, I'll keep an eye on both of those. All right, we keep going higher. I know that trade one's looking better. This one I took late in the day. Okay, didn't really want to trade today. Gotcha. Well, I mean, the fact you came out with 22.49, I'd say good job. A very good job. It's not an iron condor, no. It's not an iron condor. Iron condor would be on the outside. I'm looking at the profit trap in the middle. So it's a different strategy. It's an iron fly, which is fancy stuff for saying I'm looking at a profit trap. All right, tomorrow earnings. CGC. I was tempted to look at it. Oh, son of a gun. Yeah. Well, I looked at this on Monday, Tuesday around $2, and I was going to put in a trade. I mean, it's too late now, but CGC did have a nice liquidity level at $3. I just thought, man, there's no way I'm really that interested in trading a $2 stock. But there it was. So this was a gap up yesterday, and then here's price action today. $3 liquidity level was a big one. It's not a surprise we got that run to it. Son of a bee. And earnings is tomorrow. So we actually had the run up prior to earnings, but too little, too late. Didn't do anything with it. But I just saw it here in the low twos. I'm like, well, maybe a $2 by 250 bull call spread would have worked out. I think it would have had to pay like 21 or 22 cents for that. And now it'd be showing probably 50 to 60 cents of credit or close to it. But anyway, it doesn't matter. I didn't take the trade. But that's one earnings for tomorrow. FLO, that's flowers. This one is, interestingly enough, back down towards like COVID lows. Not quite there yet, but I mean, I don't know. Let's take a look at this one fundamentally. FLO. This is Flowers Foods. Look at this. Just retail flowers for the win, everybody. No, just kidding. It's actually food. Baker Food Products in the U.S. That's a surprisingly good snowflake analysis. 17.0 price to earnings. Reasonable. Okay, I kind of like this, honestly. It's not the greatest, I will say that. We've had I guess this makes it look a little bit less attractive. It wasn't that long ago, but this thing really got exciting in like 2015 and 2016. I will say if we come back to like 16 or 15, maybe a little bit more interested. Is there a dividend in this one? Yeah, about a 5% kicker. That's not bad. That's a good dividend. But man, I'd rather play. If we come down to the lows around $16, I'd rather be buying it there and have the dividend kicker to go with it. So maybe a $16 pending order wouldn't be all bad. Let me see if I can set a chart alarm if I'm out of them. I'll go 16.10. $16. Don't have any alerts left. You son of a gun. That's 400 alerts that I'm somehow still using. Delete all inactive. Does it let me clear one up? Let's find out. Nope. All right, fudge it. I'll just keep an eye on it. But there's earnings on that tomorrow. It's not an earnings trade that I want to look at. That's it. CBOE. The old CBO has earnings tomorrow as well. I would think this has to be somewhat healthy given the popularity of trading the last 4 years. Q4 earnings, getting a little bit more excited, optimistic, coming off the sidelines with the Trump trade and whatnot. But, again, we had a high, we had a lower right back in the middle. This could go higher, lower. I priced out an earnings trade on it. I just didn't like it. Didn't really offer me what I wanted. But the ticker is CBOE. And we still have weekly expirations. Not too bad. All right, quick spot check. Still looking good on trade 2. Looking much better on trade 1. Not bad, not bad. Again, the profit trap on this one is in the middle. So the way I can make the most money would be if price came all the way back up here to the middle. So it's quite a bit off of that. I mean, this middle is basically around the 60.70 to 60.75 area. So we're not quite there. We're trading at 60.65. On this trade, the center price was around 60.55. So this one's actually, pushing to the upside. If I put these together, I mean, this is a good thing. I actually have some profit potential, and that's kind of my max profit. If I put them together, my risk is out here, in the middle. This actually gets me paid on both trades, which isn't too bad. So as long as we stay where we are and settle in around 60.65, then I'll make a few bucks on each one of these trades, which is good. So I guess I'll keep them both up and running and then just spot check. But this one is getting closer to the threat if we go higher. This one, if we go higher, it looks even better for the late rally. So maybe one offsets the other, or if I put both of them together, there's a net profit either way. So could be worse. I'll keep an eye on those. All right, so I got to monitor that through the end of the session. We're still trading. Let me go back to the SPY today. So the fact that we dipped and bounced back is kind of nice. We have non-farm tomorrow morning. I'm still looking to see if we can get up to the 610 handle for tomorrow. I would expect it to be a news reaction, possibly a futures move overnight, and then the 8:30 candle either gets us to gap higher. Obviously, a gap higher would be a lot easier to get to this strike price and hit that 610 level. It doesn't necessarily have to hit or break all-time highs, but it has to get pretty close. If we're going to hit 610, that is basically testing this previous high from the end of January, and just that last little bit there, also end of January the 24th, where we got up and poked those highs before we fell off. That was a Friday to Monday, right? That was our DeepSeek news. This was our Friday tariffs into this week's news. We also have, when's our next holiday? We have President's Day coming up in a little bit. It's like this stuff isn't that far off. So we still have another like holiday disruption. Anyway, it is what it is. We'll figure it out. All right. So watching that for tomorrow. Back to the watch list. UAL. That's one of the most unstoppable airlines ever. This stock is ridiculous. So yeah, I mean, UAL is up 200% since the lows in July and August, which I thought really interesting. I don't know. I don't know if these are overvalued. Let me check really quickly on some of these airlines, like Delta Airlines, for example. Delta Airlines, I mean, all airlines are going to carry a high level of debt. It's not crazy expensive price to earnings wise. Delta has upside. What up, dude? Good Lord. What are you doing? Good Lord. All right. Trading at 69, fair value at 88. The airline stocks have gone kind of crazy. I do have some exposure on SkyWest. We had a poke up here towards 135. It's faded. I've got some ratio spreads in this one. If I want to see some pullbacks, which I hope we get some, I'd love some pullbacks on, where the heck did my, oh, there we go. 1, 2, 3, 4, 5. I was wondering where my moving averages went. So there is a SkyWest like pop on earnings, and then it's faded. Didn't really surprise me. That's actually quite a bit of volatility. I wouldn't be terribly surprised if some of the other airlines start to top out a little bit. I'm not saying I want to call the top on UAL. You never know, especially with this type of momentum. But man, I would think that I don't know if the premiums are good enough to do some type of like 111. I think that would be a potentially risky trade, but I can certainly look. Going out to like the end of March, maybe that's out 50 days. What would that look like? So previous highs around 116. Outside the expected move around the 120 handle. When did we have earnings on this one? We already had earnings, right? Yep, we had earnings. Beat top and bottom. That's impressive. 120 to 125. I don't even have a strike price. If I go out to the end of March, my strike price stops at 123. I feel like the market makers are like, nah, we don't think it's going to go that high, or we didn't know it would go that high. So that's a little high. But I could do something like this: buy, sell, sell. Grab $2.24 of credit. The issue with that one, though, is I don't have any defined risk. This is undefined risk, which I certainly don't want. Probability of profit says 85%, which is surprising considering the deltas are like 30. But let me take this out to April 17. This might be a little bit better. So if I did a 125, 130, 135, or something like that. It's about an 87% chance of profit. I don't know. I mean, it's a lot of risk, and I'd probably do something like this. If I set in the trade this way, I collect the dollar, I'm better off doing like a 130 by 150 to define the risk. Now we can still pull in 58 cents. There is a $500 profit trap though. So if price continues to go up, I would have a profit trap here. So that's not too bad. But also I'm collecting way little credit for this trade. So probably not going to be the greatest. If I want to do just a simple bear call spread, put this out of the way. There's a 17 delta, sell that, go 20 wide, pull in $1 and change, but I'm risking $1,800. There's no profit trap. At least if I'm wrong, if I did a trade like so, I mean, that's not awful. To get a $500 profit trap, price would have to go up. We'd have to see price breach the 130 handle. Right now, 130, we'd have to have this stock. It must go up around another 20%. Is there anything that would be a catalyst through March and April that could push the stock market higher? I mean, all-time highs would probably push everything higher. So if the S&P and the Nasdaq are reaching or breaking all-time highs, everything that's been floating well and making 52-week highs is probably still momentum based. Although I will say this, I'm not interested in this trade. I'm not super excited about a $60 winner, but I am excited about a $550 winner or $560 winner if I get the profit trap. And directionally, we're not going to go too much higher. So the stock would have to go up another 20%. We've already had a lot of earnings. We've had a crazy run, and I'm not saying that this can't happen. I mean, if I was going to do this on Palantir, I'd clearly lose, right? But in an airline stock, it's like, are we able to go higher on UAL? So price to earnings, not like this. I mean, like fair value is 92. We're trading at 108. I don't mind the trade. Okay. I am going to take this trade for hopefully 55 cents. It's not a huge, upfront income trade, but it is a potential profit trap. Again, I can show you what it looks like on profile. It's going to look something like this. So if I draw this out on a risk graph, it's going to look something like this. So I have my current price. I would have my credit. I have a profit trap, and then I have my risk. So it looks something like that. So I'd have, let's say my, 60 cents credit. I'd have my $5 up here plus my 60 cents credit. And then my risk would be the 20 wide. Okay. But if I take away 560, my max risk is about $1,400 on the trade. So that's still less than 1%. I mean, it's 50 bucks. That's probably the reality is I'll probably make 50 bucks on the trade if I'm right. If price goes up, I mean, we'd have to basically breach this 22 delta. There's about an 86% chance of profit. The issue is if I go up one more strike, it looks way less attractive. Now I pull in 36 cents of credit, but my trade is now a 90% chance of profit, which I kind of like. It's the same profile, same risk, but I'm not that excited about, a $35 winner. Honestly, I probably shouldn't even take the trade. That's such little reward for. I mean, the profit trap is fine, but that's about the only good thing about this. I'd have to like nail this thing. It'd just be nicer if I could pull in more credit, not have a bunch of risk. So, do I like this trade? I mean, even going wider on the buy side, it's like I get no extra credit to take on a bunch more risk. So that's probably the better trade. If this was offering a dollar or better, I would take the trade. Like I like the mechanics of this 90% pop. I like that. If this was a dollar better, I would take the trade. But at 34 cents, probably not. At 55 cents, probably not. It's not worth it. So anyway, just for fun, let me put in a 130 up here and say this is an April 17 call Condor. So the one, what was the trade here? The 125, 130, 135. So 135 would be my threat. So I'm going to move this up to 135. Yeah. So I'm not going to take the trade just because the upfront credit is kind of garbage. But a 125 by 130 bull call, and then the 135 by 155 bear call. I think that's how I had it set up. Yep. So that trade right there. Again, hypothetical, I'm not going to take it. I'm pretty sure that's going to be a profitable trade. The only issue is it just doesn't offer enough. If I got it in for $1, I'd be willing to say, look, it's worth $1. I'll make $100 on the trade. That's fine. Have the profit trap if price continues to go up. But it's also in that window. It's like, are we going to see all-time highs? And if we do, everything could rally. We could have like another kind of broad market rally this first half of the year. We're just trying to get through and wading through these first like 30 to 60 days of office, the first 60 to 90 days of office. As long as there's no more drama with the Trump, the Trump tariffs, and if they don't get worse. Anyway. Okay. Daniel, did you have a plan UAL, or are you just commenting on how awesome the stock has been up 200% for an airline, which is ridiculous? So Delta, also a big run since August. The one stock I wanted to look at, though, I'm going to take a look at this more in detail next week. We're at $80 on Win. I really love the stock in the 60s. I don't know if I'm going to get it all the way down there. Las Vegas Sands, same type of thing, down into the 30s. This one might not be a bad play. What's the IV on LVS? LVS willing to own. How far out could I go? $35. Okay. Yeah, I think I'm going to take one of these trades. So if we come back down to 30, let me see if I can get in the 30s here. So a 30, 250, and a 30, and a 2750. Would I be willing to own some shares of this? I think I would. So I'm going to do some puts on this one. If I took 400 shares, let me calculate the break even. This is going to be probably from my margin accounts. 32.5 plus 30 plus 27.5 plus 25. Did I do that right? 32.5, 30, 27.5, 25. All right, so 115 divided by 4. So 28.75 would be my break even. 28.75. I'd be pretty stoked to own LVS around $28.75. So if I don't get assigned on anything, I have $828 of income. Max loss, I'd repair the stock, I'd repair the trade. It only costs about $11.51 in buying power. That's not too bad at all. Return on that buying power is pretty solid. So 8.28 divided by 1151. I mean, that's 828 there. That's a 72% return on buy power, which is decent. I would repair the trade and own the shares. So I think I'm going to take this trade. Hopefully the liquidity is there. The bid price is 790 or so, 788. Got a mid price at 828. I'm going to try to get anything over $8 would be acceptable. I'm going to try to take this down to like 820 because I'm just selling puts here. So technically I've got to trade the bid price only. So the bid price would be $1.18 plus $1.63 plus $2.19 plus $2.88. So 78 is the bid price. Let me see if I can get like 810. And this is going to go into, it's not a bad play there. Fill to 810. F yeah, that was pretty decent. I'm going to get greedy and try another account, try to go 815. That was a generous, I mean, I got filled for basically 20 cents more, 22 cents more than the bid price, which isn't awful. Let me try to go 815 here for this account. $815 got filled. All right, well, let's try something higher. Let's go 820. Filled at 820. All right, this is pretty generous. Okay. Let's go 336. I'm going to try 825. I mean, heck, I might as well try to go mid-price here. 850. Not filling. All right. So a little reality there. 850 not filling. Let me try 845. Not filling. 840. 830. 825. All right, 825. So that is 1, 2, 3, 4 fills. 810 to 825. Not bad at all. Let me put this in my personal tracker. So LVS. LVS. Let's go all the accounts here. Let's try this one as well. So that would be 400 shares at 28 bucks. 400 times 28. It's not bad. I'm going to throw this in one more account here. This trade, similar, one more account. Fill the 820. Okay. Sell put at 32.50. Sell put at $30. Sell put at 27.50 and sell put at $25. Willing to own, and the break even would be 28.75 on 400 shares if assigned. And also, if I collected, this is what's nice about that. If I get, so 28.75 would be my break even on all 400 shares, but because I'm collecting $8.20, I'd still pull another $2 off of that. So 205 minus 28.75, I'd actually own the shares. Net break even with credit is 26.70. So is it possible that at $26, if we go back to this chart, there's not a lot of times it's been lower than that. It literally be like the great financial crisis. So I'm not saying that it can't get down there, but I mean, this thing basically went to $1. So if we can hang out here in this like $30 zone, or we just go back up from here, then I'll just collect the income. Otherwise, I can repair this thing for hopefully a few bucks. Okay. All right. We got a few more minutes here. Let me do a spot check. Okay. Barely hanging on that trade number 2 and looking just fine on trade number 1. This one's actually up about $6 right now. And this one is, all right, so we're starting to see some loss of profit if I get through around 60, 70. I mean, what a stupid fake out that was to drop like that. I mean, we dropped from, what's the SPX doing? SPX on the day, we were up to around 60, 80, dropped all the way down to 60, 46, a 35-point drop in 10 minutes. And it since just came all the way back. Expiration date on those, yep, good question. That was all for the end of the year, December 18th. I'm just doing an end of the year. So it's kind of like a leap, like a cash secured leap. So just less than the year. So that's out. Oh, never mind. Well, it's too late now. I got a good credit. It's out 680 days. So it's out to frickin' December 2026. I'll say this. Now that I see it's out to December 2026, 50% or better, I'll just take the profit. So if I see a, $8.20 trade down to $4 or less, I'll just take the profit. So I thought it was a December 2025. but I see here we have September 2025 and then January 2026. So if I want to go out and do like a leap, this is out 344 days. I'm getting a lot less premium, but I could still pull in this trade for $2.85. Also not a bad trade, but I'm going to keep the one as is, and I'll just go after like a 50% winner. If I get assigned, I get assigned, and I'll replace it. No big deal. All right, so that's fine. Okay, this trade looking good. This trade is still hanging in there with some profit. As long as we stay above 60.70, then trade number 2 is barely profitable. If we get a little bit higher, like trade number 1 is still looking pretty good. So it's climbing back into the profit trap. This one was like a $17 credit. And so if we get into that profit trap, that is pretty sweet. So I could take like a cash settled loss on the second trade and then a big win on the first trade if I get into that profit trap. All right, anyway, there's a few more minutes left in that trade, so I'll keep an eye on it. So let me put that expiration in for the LVS trade. That is a December, so that's 12 of 26. So that's the December 18th of 2026. So didn't mean to go out that far, but same idea, same mechanics. I'm just going a little bit farther. It's fine. It's fine. Okay, so I've got that in my tracker. Good. What else? I've got about, I don't know, probably less than 10 minutes on the session. I'm going to cut it a little bit early because I got another webinar to jump to at 4 p.m. On that note, if anybody would like to join me, I'll put in my link to the Telegram channel. I'm going to be live at 4 p.m. Talking about some, reward to risk trades that right now I've got 2 trades running out to tomorrow on this service. So this is going to be for my liquidity levels and double up service that hopefully we have some winners. We took some winners this week. I had a winning trade on EA this week. I had a winning trade on PayPal. I'm waiting to see if AMD and CMG get into profit for tomorrow. And then I've got a trade on the SPY tomorrow to see if we hit the 609 or the 610 handle. And if that's the case, it's looking pretty good. So far, we're batting about 67% winners with the average win about 82% on risk, average loss about 73% risk, and profit factor 2.51. So not bad. Just I'm always looking for trades. But that will be at 4 p.m. if you want to join me. If you're not in my Telegram, I see a lot of familiar names. This is common, but I just posted out here just in case. So Telegram, there's my Telegram. Chris Pulver. You know what? Fudge. This is how I get all these freaking imposters. It's like if I post my Telegram link in YouTube, then it's out there. So I kind of like Discord where I can post like a 1-day link and then it goes away. So it doesn't let like bots and scammers grab that stuff. I mean, they can't impersonate me on this channel because I'm an admin, but I'm just saying, if you'd like to join me, let me see if I can just find a direct link to this. There we go. So prosperitypub.com/liquidity. There we go. That's a little bit easier to share. So www.prosperitypub.com/liquidity. There. Let me click on that link and make sure it works. Nope, that's the link. Son of a bee. Get out of there. Get out of there. Okay, that just takes you right into the Zoom session. So I'll be there 4 o'clock. All right, there's that. Don't do it. All right, so I'll be there at 4 o'clock. Anyway, that's that. What else? Flat today in the S&P. NASDAQ a little bit better. 0.25%, 0.29. Let's go to the daily chart. NASDAQ faring a little bit better. A lot of chopping here on tech. So far, we had that little bear correction. I mean, I will say this on the NASDAQ side, we haven't hit all-time highs since the last bit of the holidays, right? So this was pre-holiday, pre-Fed. This was the last time we hit an all-time high in the NASDAQ. This is all led by Mag 7 after Thanksgiving. Since the Fed on the 18th, we have not been to the same high yet. So I would say that in order for the NASDAQ to look a little bit better, we probably have to take out that FOMC high and close above that to have any type of momentum in tech. That, I mean, it's pretty straightforward. Now, there's still a reasonable bar count in the S&P. I'm not crazy bullish on the markets right now. I like all the income trades I'm doing in my services where we're just staying out of the way and giving ourselves a wide margin for error. But anyway, I mean, if we break above this FOMC level, then we're close to the all-time highs, and that momentum gets everyone excited. And usually, momentum is a good thing. So if we just poke those highs and fail off those highs, then that's not a good thing. But if we break this FOMC level and we hit the all-time highs, market's going to celebrate it. The question is, do we close above it and stay above it, right? I mean, we poked the all-time highs here and then closed red. We poked the all-time highs or close to it and then closed red. So, same type of thing might be happening now. It's like we might get close, we might sniff it out, but we might not close above it. And we're just going to keep pestering these highs, but not necessarily going higher. So this is why I'm trading a lot of stuff where it's like I've got margin for error. We can get all this indecision up here, and that's fine. But if I don't have a lot of direction, I just want to stay out of the way. The best trade, in my opinion, and I'll let you go here in a couple minutes. The best trade, in my opinion, is and I don't know what the catalyst is, and I don't know how the market's going to make this big, nasty correction, but if the market this year can pull back to this area between, this is a daily time frame, but if I can pull back to like the 144, the 200 moving averages, or I would just say anything in like the 550 zone, 550 or lower, I would be willing to kind of load up on the longs for the year. That to me is a good enough position to say dynamic support, and I would position for timing the market, trying to get back towards these all-time highs, possibly higher, and that to me would be where a lot of money can be made, right? If all we do is this and we end up like just inching higher, I mean, that's fine. That's fine. I can still make money that way. But I'd much rather be deploying capital, being a little bit more aggressive, timing the market a little bit more if we have a balanced pullback towards this 200 moving average. So I would say between like 570 and 550, that's what I'm liking. That's what I'd like to see. That's what I want to see. I just don't know what the driving force is going to be to get that to pull back. Could be a lot of things. I mean, everything that we're seeing and hearing, like DeepSeek and tariffs and Trump volatility. But I mentioned this week, like the markets could be acting as guardrails where if nothing really breaks, the market just keeps plugging away, slowly inching higher. Trump's not going to do anything silly if the market's going higher. If the bond market doesn't break or yields are going lower, that's probably a good thing. Dollar's getting weaker, maybe. That's probably a good thing. Fed's didn't have to do anything silly. Inflation data next week will be interesting. Is it higher or lower? Real quick before I go, take a look at some inflation information. Here's our inflation data. So CPI has been trending up since October. So we basically bottomed out while the Fed cut rates the first time in September. It has been trending higher ever since. If you go to PPI, it looks very similar. So we go back to the last 4 or 5 prints. So we bottomed out here in September. It's been higher since September of last year. Same thing with CPI. Core PCE, basically we're not getting better. We've had the same sticky 2.8 core PCE since February 2024. We are literally a year into core PCE not improving. So inflation prints next week, CPI, PPI, PC is going to be at the end of the month. But I still think it's important to see, like, is the narrative changing from this inflation talk and higher inflation and sticky inflation and tariffs causing more inflation, or is it going to get better? Because if the inflation story is less of a threat, then I can see the market justifying all-time highs again, right? It means the Fed may look to cut an additional once this year. Maybe have instead of 2 cuts this year, which is planned for June. Yeah, June and December. Maybe throwing one more cut in somewhere in between. Maybe. And that's why I took a screenshot of this right here. Because if this changes post CPI next week, then I want to have this as a reference. Okay. All right. Thanks, David. Appreciate that. And I'll see you at 4 o'clock. Yep. Okay, we've got 8 minutes. I've got trade 1 looking good for profit, and I've got trade 2 that's in a little bit of trouble. Not a lot, a little bit. It's right on the verge. This trade was trading for about $15 credit. Now it's at 20. So this is upside down about $5. This trade was at 17. Now it's at 8. So net, still profitable, Unfortunately, not super profitable, but one winner, one loser still adds up. I mean, what is this market doing? Is this market? I mean, are we going to get to fresh daily highs after a freaking 30 to 40 point sell off? That's crazy. Again, like just this market wants to buy the dip so bad, it's not even funny. That's wild. So we're right back where we started. What a disruptive day for that little spike. Market did absolutely nothing, spiked, and then came right back. And now my order flows again. Like this is a pretty good probability trade. This is why I got it for daily or the double up alert service. I hope we get it. I hope we get 609, 610 tomorrow. I could hopefully turn a butterfly spread into like a maybe a 50 to 100% winner. So I'm hoping that we tag 609 or 610 tomorrow and look to take some profits. All right, we'll see. No, I know. I mean, yeah, I don't deny that there's inflation. Look, real talk, there's inflation everywhere. Everything's more expensive. Life is more expensive. Nothing's getting cheaper. Businesses are going to continue to pass on the costs until we stop buying stuff, right? So what is it that we keep having? Well, people are still making money in jobs, whether they're getting extra gigs or they're changing positions, climbing the ladder, adjusting whatever vertical career paths. So they're making money that way. There's also a ton of household equity. People are borrowing against their equity they have in the homes, whether that's good or bad, as long as it's invested properly or safely or whatever. Then you just have to worry about interest rate arbitrage. If I borrow on my home at a 5 or 6% interest rate or refi, I mean, I'm seeing a lot of refis and HELOCs at like 5%. I mean, if you can invest that money and make 7, 8, 9, 10% on it, it's worth it. But anyway, I'm just saying, there's a lot of household wealth. That's the reason we've been so resilient. The consumer is clearly resilient until it's not. So as long as jobs are steady and growing, pretty consistent, pretty resilient. As long as inflation's not running super hot, probably resilient. But later on this year, I think the housing market has to correct. We have to have either new prices plateau and existing homes probably come down, or both have to come down. We have to see supply side catch up. We'd like to see the 10-year yield drop so borrowing costs are cheaper. That's going to be probably the most important thing. We're at fresh freaking daily highs. Unbelievable. Look at this thing. We're at fresh highs on the day. The final few minutes of the day. This is crazy. This might fudge up both of my trades. You kidding me, dude? Now I've got, oh, darn it. Well, that's not fun. So this trade's down about $13. This one is up around $3. It's going to get real interesting these last 5 minutes. And there is your reward to risk story of the day, because it's a lot of action the final 60 to 120 minutes. This market is relentless. But that's good because my 610 looks even better, more attractive for tomorrow. So that's fine. And I'll take that for if we get it, right? We still have to have non-farm in the morning. A bump to 609 or 610 would be awesome. I'd love to close out kind of early in the morning if I could and grab whatever gains I can. It says until we're close to 610, I'll believe it. I mean, we're at 606. So, I mean, this level, this has been climbing, by the way, all morning from 600 net to now over 1,000. So, I mean, to me, this is a good indication that market makers are hedging. Market makers want to defend this level, but they are delta hedging in order to get that run in case we hit 610. So they are now long calls, which is probably what a lot of this nonsense is right here. They were selling calls. Now they're buying calls. They're being delta hedged. So even if they get to 610, they are delta neutral, right? They're delta neutral. That's their job. But the nice thing is we're up to some fresh highs in the day. Let's see if there's any momentum behind that going into tomorrow's non-farm. When did the uninverted yield curve curse? It's not the uninverted or it's not the inverted. It's the the disinversion, right? And that's the other thing. It's like you can't model this environment that we're in right now. Nobody knows what the hell's going to happen, right? I mean, this I've got it on my chart here, and I do have to run in a couple minutes. But it's not. I mean, it's both of them. The 10-year and the 2-year, right here. Go to the weekly time frame. Let me get rid of these. Well, you can still see it. Whatever. So it's the disinversion that I'm worried about. I think this is borrowed time. The last time we spent that much time underneath the zero line with an inverted yield curve was back in the freaking 70s. when there was crazy amounts of inflation and then the market was all sorts of wonky, right? But this spent, I mean, a long time. This was the longest time, but it spent a long time. And eventually when it came out of it, like things weren't great. So it's the 10 and the 2. Like, yeah, it's always borrowed time in my opinion. It doesn't have to be this year. We've had recessions that last or that come after a disinversion like 12 to 24 months, sometimes 30 months. But the average is around like 12 months. 12 to 16 months is the average as a disinversion. It's the 10-year and the 3-month that I'm really interested in. This one doesn't have a lot of craziness. It's like this one is disinverted, recession followed after, disinverted, recession followed after, disinverted, disinverted. These black lines are recession starting points. So this is a to be determined, right? We're disinverted. Is there recession, and will we ever feel the effects of a full on everything's in a recession? Everything's in recession. If we don't feel that, it's going to be a lot like COVID or a lot like 2022, right? 2022 was a bear market, but not every sector felt a recession. I mean, it was a difficult market to trade because bonds were down, equities were down. It was only like the diversifier was Forex. If you were long the dollar or you were long the yen in 2022, you did pretty well. Actually, not even the yen, because the yen was a piece of crap in 2022 when they did the opposite with monetary policy. So anyway, I think it's borrowed time, but it's like this market can just keep climbing the wall of worry until it can't. And we don't know what the catalyst is. That's like the one thing. It's like as bearish as you might want to be, I just can't justify being bearish until like price is evident and there's just crazy amounts of terrible things happening where the market doesn't look optimistic anymore. So you've got to destroy the consumer. You got to break something in the bond market. You got to break something in the equities market. Like something has to break. The Fed can break the market. Who knows? But right now it's like nobody's trying to flinch. It's like it's just a big game of chicken. And until something swerves, everything just kind of climbs the wall of worry until it stops. Right? So, all right, I got to bounce. We have 1 minute for the settle. Where are we at? Oh, you son of a bee. Taking some heat on my second trade. First trade's up like $6. I might be upside down a tiny bit today. Son of a biscuit. That's so dumb. That's crazy, man. Well, that's why I'm watching it. All right, anyway, I'm going to go. I'll see you at 4 o'clock. You can jump to the webinar. I posted the link. Have a good rest of the day. I'll see you tomorrow. Thanks. Bye.